Aloha YouTube. Thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a viewer requested stock. This dividend company has a dividend growth streak of 9 years of consecutive increases, 9 years dividend streak without a reduction, a dividend growth of 5 years, 25% per year, which is pretty fast and I say pretty good. The 10-year performance of this stock, if you were to have invested on it 10 years ago, you would have been up 542%. So if you're interested in this company, sit back, enjoy. Do me a favor, hit that like button. If you're not yet a subscriber, subscribe. Don't forget to hit the notification bell. As always, please remember that all of this is not financial advice. This is just me sharing. Without any more questions, any more delays, let's get to this stock. So the company that I'm talking about is Zoetis. Ticker symbol is ZTS. If you're not familiar about this company, it is a company that develops, manufactures animal health medicines, vaccines, and diagnostic products. So if you go to the website, you can see a little bit more about it. They offer vaccines and other treatments for your pets. So looking a little bit more in the website, so one of the things you need to do if you want information about a specific company, go to their website, look for investors. In there you'll see something like a presentation. You can see a little bit more of this company at a glance. 70 plus years of experience. So here are some of the things they provide: medicine, vaccines, genetic testing, annual revenue of $8 billion. They're in about 100 plus countries, 29 manufactured cells, 7 major products, and 8 core animal species. So you can see some of their highlights in there. So one of the things I also want to check out is, if you were to have invested $10,000 in December of 2015, and at the time of this video, you can see that you would have accumulated at least 311% return with a compound annual rate of 19%, which makes your investment to about $41,000 in 8 years. So that's something to kind of consider. So one of the things that you need to do is, it's always good to invest early so you can get that annual compound rate. So one of the things I always want to see is one of the things you need to also see is the dividend reinvesting. So I always like to, in my opinion, you reinvest your dividends. So that's something that I always do. Now going over to Simply Wall Street, so you can see dividend safety score 74, which is safe. You can see the dividend yield of 0.8. Market cap is about 89 billion. Looking down to the dividend payout ratio is 28. Your dividend streak of 9 years without a reduction, and you got your forward payout ratio of 30%. Now looking at it, you can see dividend growth of 25% per year. The latest is 5%. And then you can see right here, as you can see, an upward trend, dividend growth of 9 years, increase the last 5 years. And then you can see here, if you decide on getting this company, you get paid quarterly. The months of March, June, September, December, and your annual payout would be 173. And you can see, based on their analysis, they might be undervalued. Looking at the PE ratio, 34 versus the healthcare 17. It is kind of in the high side, getting close to the 52-week price range. So if you were deciding to purchase this company, I would recommend to wait for a dip. That way you can get it a little bit cheaper. Yeah. And then you can see right here some of the stats here: free cash flow, sales growth, total sales, $1,000 outstanding. Return on equity 47%, return on investment capital 25%, free cash flow margin, operating management, net to debt to EBITDA, and net debt to capital. So moving along to TipRanks. So their analysis also rated as a strong buy. 7% upside all the way up to 211. The highest price target would be at the 230 when you got your 211 and then your low of 195. Now looking at a little bit more of the stock analysis based on their smart core, they rated as a 7, which is a strong buy. There is hedge fund have decreased their share, and then there's inside transactions of which they've sold their shares. Now moving along to Simply Wall Street. Based on their analysis, you got your share price versus fair value. Based on their analysis, using what they call a discount cash flow model, they rated that company as overvalued. Their fair value based on their analysis would have been a 161. You can see right here. So one of the things you want to do is look at many different sources. So you can see for them, they feel like it's overvalued, whereas the other source says it is undervalued. So always good to always check out other sources. Moving along to NASDAQ, based on their analysis, 17 of them rated as strong buy, and you can see some of the companies that rated them as strong buy. So moving along to bar chart, based on their analysis, you can see rated as a strong buy. Currently, 3 months ago, it's been a strong buy. The past 2 months and a 1 month strong buy. You can see based on the breakdown, 1 moderate buy, 2 strong buys. Pretty much the same as the past couple of 3 months. Yahoo Finance, taking a look at which institutional companies hold it. You can see based on Yahoo Finance, you can see Vanguard, BlackRock. You can see some of the shares in here. You can see Morgan Stanley, Bank of America. And then here's some of the top mutual fund holdings right here. Now moving along to alpha spread, based looking at the balance sheet, $9 billion for liabilities, $14 billion for the assets, and then you can see right here, revenue. The revenue the past 10 years has been positive. Operating income, net income. You can see the free cash flow. Capital expenditures, operating cash flow, and you can see right here, gross margin, ROIC, ROA, ROE. So you can see all the green ones. So my take on this one, I think it's a solid company. I'm not sold on buying it, in my opinion. I think it's a solid company. So if you're looking for a company that deals with vaccines for animals, this is something that you would probably consider. Myself, I think I like it, but I think for me, I would just go with another company and use something else other than Zoetis. But hey, I think it's a solid company. I think it is a company that if you were going to invest on, I don't see a reason why you wouldn't. You know, if you were invested in it 10 years ago, you would have 542%. So definitely check out the other dividend videos that I've had. Also hit the like button, hit the subscribe button. Don't forget to hit the notification bell. As always, stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.